Chill investors, what is going on? All right, guys. So I wanted to go over a few things. Okay, so I have been selling puts a lot. We've been taking the premium, the small little wins, just because this market has given us a lot of chop, right? So what I'm doing is I've been taking the profits through the week and going ahead, closing them early, just if it goes in our way, right? But like if it goes down, I'm not worried about it. I set it for that purpose. But if we can go ahead and capture that premium, 30%, 40% within a couple days of setting it, I'm going to go ahead and just take it. Okay, because with this chop and this market uncertainty going on, we've been able to sometimes reset it the same day. I think we did that on a few of these right here. Closed it on the 20th. And then we opened these also on the 20th. So we closed Iran on the 20th, and then we opened Iran on the 20th. Okay. So we saw that they ran up, sold them. By the end of the day, they all came back down. We then opened them, and then when they ran back up, we went ahead and closed them. Okay, so we went ahead and got that 2.3% in 5 days, right, of our premium, and was able to capture that. With Nvidia's earnings that just came out today, which were good and everything. I didn't listen to the call. I'm going to listen to it in the morning or later tonight. But with that uncertainty when we were up big today, I went ahead and took our profit on the majority. Like I didn't close path, right? I wasn't up, right? I'm still like break even basically. So I was like, okay, just leave that. Not worth it. ONDS. Really, I wasn't worried about ONDS because it didn't have any true effect from NVIDIA itself as far as like IREN, right? Databases are involved with NVIDIA, right? Um, Cipher, NVIDIA, right? That all has it's connected. Sound, they're not truly connected, but again, if tech took a hit, sound was going to go down with it, right? So I went ahead and closed all those that could potentially be go down based on the news, which at the end of the day, everything did trend down and we did get out before all that happened. So that's awesome. We were able to get out right. But now I want to take a look and kind of show you guys a more in-depth play that you guys can make with the wheel strategy. Okay. So one that I want to look at is ASTS. Okay. So somebody reached or tagged me on X, showed me this chart, right? Breaking out. Okay, we have another breakout. And typically when it breaks out of its channel, we're going to start a new one. We're going to go back to that 130, 150 target we initially had. We sold at 117. So I'm not mad for picking it up for lower. Okay. But how do I want to go about this? What is the best way for me to protect my downside and capture that upside, right? You're like, well, that doesn't make any sense. How do you protect yourself from the downside and make money to the upside? Okay, that it doesn't typically work out that right way. Typically, you're just exposed. That's just how the market works, right? But if we take a look here and go to ASTS, as you guys know, the wheel strategy, we like to sell cash secured puts. Today was a red day for ASTS overall. Okay, let's go to ASTS. Let's go to this. I know the chart's going to look pretty loud for a second, but just give me a second. Okay, so we have our add diamond. This is telling us we should add shares for ASTS. So what are we going to do? We're going to add some shares. It was down 4% today. The only way that it kind of becomes hard whether or not we add tomorrow morning is that if tomorrow is up 4%, we can't really do the CSPs. Now, if the stock is up 1% or 0.5%, we can still do a CSP. It was down 4% today, right? 1% up. It's still a net negative 3% from the day before. So overall, we are down still, right? Our premiums are still juicier than they were 2 days ago. So we can do a CSP. Now, our CSP is kind of telling us smart money support lands like kind of like 78, which really in the options world, that's an $80 strike. Okay. So what we're looking for is an $80 strike. So if we had a dip, I would want to buy for 80. Go ahead and we can ride the rest of the wave. I'm comfortable owning ASTS. Now, I do understand the downside risk, right? Downside risk is going to be this trend line that we have followed. Okay, if you take off our key levels, okay, and just do our automatic AI trend lines here, okay, right here, touch, 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 it touches this line consistently, right? We've had 3 touches and all to this upper half. This is the mid. So how I think this is going to probably come up to this mid. I think that we're not going to have the full run to 135 quite yet, but if we do, no problem. We'll make money. Okay. So how I want to do this, right? I understand there's downside. Downside is roughly, it depends on how much time it takes, but I would say $70. So 10 to the downside, our target is back up to the 130 to 150 range. Okay, that's what we're looking for. So I can take 10 to the down, right? If we go down here, okay, we got a 20% downside, and we have a, let's go 130. Let's just go back to all-time highs. And we have a 60% upside. So 20 down, 60% up, right? That's a pretty solid risk to reward, I would say. So the best way I think we're going to play this and how I'd like to play this tomorrow. Let's go back to the, here we are. So if we take a look here and go to ASTS, this is after hours, so it's not going to be perfect, okay? Premiums will change, but just overall, let's just take a look, okay? So we go to trade ASTS. We're going to go to sell a put. And I typically want to go to March 20th, but right now I think I do want to go to this April 17th to get the chunkier premium. Okay. So I'm going to go ahead and hit this 80. Okay. This 80 strike, yes, it's a 38 delta. It's a little higher risk than I would typically do. I typically would do the 32 or the 30, somewhere in this range, right? This is our standard risk reward delta that we do like. But what I would do is I'm going to do the 80 strike. And what that's going to do for us is it's going to pay us immediately, okay? So we're going to make the $11 per share. So basically, we'll either make it as if we were getting it for or selling it at 91, right? $11 higher than our current strike, right? So 91.35. But if it goes down, we are protected because we did make some money on it. Okay, so break even to basically, if we wanted to sell these shares, if we were to get these shares, okay, and we wanted to just break even on this entire trade, 68.65 is our break even. Okay, so I just need to sell ASTS for that, which is fine. I have no problem with that to get out of it completely. Okay, so what I'm going to do for my portfolio size, okay, you need to have the capital. Okay, so one contract is 100 shares, right? So 100 shares, we want to buy them for $80. So you need to do times 80. So you need $8,000 to do one contract. $8,000 for 1135. Let's go to our calculator here. So the example we're looking for is ASTS on tomorrow's date would be, we'll have to do today's date just so the calculator works. All right, so we're going to do the 80 strike. We're doing a put. We are selling that put. And the expiration date is 04/17. Okay, and we're still doing the 85 or 80 strike. So one contract, and the premium was 11.35 as of right now. Where is it? 11.35. Okay. So as of right now, at this time, again, all educational. So I'm just kind of working through this so you guys can understand my thought process, so you guys can apply what I am teaching for education to your own portfolfolio. Okay, so you need $8,000. With that $8,000, you are going to make essentially $1,135 up front. They're going to go ahead and pay you that money. That is now in your account. Okay, that is a 15% return on your capital in 51 days. Okay, an annual return of 100%. Okay, so if you could do this every 51 days all year long, okay, for an entire calendar year, that is 100% annual return. I don't think anyone is complaining about an annual return potential of 100%. Okay, you're guaranteeing 15%, and guess what? 15%, you just beat the S&P 500 average. You're good, right? Like, I'll take it. And I want to own ASTS. I believe in the company. I believe in the long-term outlook on the company. Therefore, we can go ahead and feel confident with this move for me, right? Now, what we're going to do is, for my position, I'm going to start with 2 contracts, okay, which will give me roughly 2270 up front, okay? And this part is the part that protects us ultimately from the downside, okay? Because they're paying us up front. We said we'll buy the shares if it goes below 80 and stays below 80 April 17th, okay? If we rally on and keep pushing, you'll be able to close this earlier and just keep all the premium, close it for 80%, something along those lines. But I want to do something specific with this 2270, okay? I'm going to put this 2270 to work, okay? So what I'm going to do is I'm going to go ahead and go to the option chain again, okay? So let's just imagine you did this contract. So now they put 2270 in your account. What you're going to do is you are now going to buy a call because you believe that it is going to the upside, okay? And what I'm doing is I'm going to buy January 2027. I'm not going to buy something short-term, high risk, okay? So what I want to do is buy the January 2027. And I believe the company, by then, how much premium do we get? 2270. So, and by then, I believe the stock would be 130, 150, somewhere in that range, right? So 120, 130 is the high previously. So let's see here. I'm just kind of taking a look. No volume at 115, 5 at 10, 4. So 120 has 41. I'm just trying to see where all the volume activity is. So it looks like 120 is holding it down, and then there's the 100. Okay. So what we can do, you can pay a little out of pocket if you want this one. Okay. And all you're saying is, I believe the company will be over, again, by January 2027, will be over $100 with your break even 126. So on January 2027 or January 15, 2027, the stock will be over $126.38 on expiration date. Now, if by the end of this month or by April, the stock is well over 130, it won't matter. You'll go ahead and sell it for way more. I don't know if, I think it's only on Robinhood Legend. Let's see if we can see it on Robinhood Legend for a estimate value. I believe they do simulated returns. There it is. So let's pull up ASTS. Great trade with Navitas today. That was fantastic. Easy 20% win in a day. That was awesome. All right, so we go to simulate these returns. Let's go to January 2027. And we're talking about buying the 120 call, okay? So what I'm going to say is, I'm going to say if I was going to pay top dollar for it, all the money, okay? Let's just go with that. And now we can go to simulate returns, okay? So let's just say buy, let's say, buy August? I don't know, by August. We'll just say by August. The stock ended up, or we'll go by the April since our expiration date. So let's say by April 23rd, whatever reason, April 25th, the stock is over 120, okay? That would be roughly an 83% return on your investment, okay? So now you took your $2,200 premium, roughly, right? $2,200 premium. You were to buy this option, which now you use that option money, $2,200, to make an additional $1,800. And this $2,200 was just premium that you collected using your capital. You just risked money that you essentially didn't have from the start, right? You weren't risking anything additional that was already in your account. You were only risking premium that you were to be collecting for just signing a contract saying, I will buy a company I like at a price I like. So by saying I will buy ASTS for $80 if it's below 80 on April 17th, they gave you $22.70. I'm then putting $22.70 to work with ASTS, one contract, and ultimately, I believe it's going closer to 150. So if we can get to that 150 mark, I'm not saying by April for that, but like, let's just say it gets to 150 by August, September, right? Then there's 2,700. You just doubled the money that premium gave you and you put it to work into a company you believe in. So goes down, no problem. I have my shares, right? I got my shares at the price, cool. And I was able to buy this option at a later date. Now let's say it gets closer to like December time, right? December time, it's still 150. You are still making a 60% return. If it is 134, you're still making an 8% return by that time. You have time. Even if it dips in the short term and you got the sign the shares, you bought that option and it went up, right? Even by December, it hit to the 130 mark, which we all have targets of 130 to 150 for ASTS. Same here. He's got it 130 on this one. I'm sure I can find more on X. We have our charts as well, but I don't want you guys to just take my word for it. I want to take a look at a couple other people's, right? Expecting 100 in the next few weeks. So that would be a win. You can sell it at 100 if it just hit 100 in a few weeks. Looks like short interest is spiking, so we could see another squeeze. He's saying 172, and that's what we talked about. Our downside is 70. I completely agree. Let's see here. He believes we are going to see this bounce and then one more. Oh, this is way, I don't know where that's Planet Lab. That was weird. Institutions loading up. Let's see if we can get a chart. Here we go. Another chart. Yeah, somewhere. I don't think it's at 160 range, but I do think you still get that 130, 150 range. So he's right there with us. Correction, rejection at resistance. So we have a gap fill at 95. So that's another move it could make to 95 and then retreat. So just keep an eye on that. But it seems to be the one that wants to move next. We have our ad. This is the part where I'm okay with it. We have an ad. Okay. We had an ad here. We had a buy here, right? Like these opportunities present themselves and they have led to much, much more gains. So it's worth the risk, I believe, for this company. So yeah, that's the play I'm thinking with ASTS, CSP, take that premium, put that premium right to work with ASTS and capture that upside. If you want to be a little riskier and do the shorter term option, you can do that. Just understand that there's more risk to that, as that is more likely to not give ASTS the time that the market seems to be needing for consolidation, for figuring out if the world is okay. You limit yourself, but you can buy more options and just get a higher reward, but the risk is there, right? So I like the further out dates. It allows the market to do whatever it wants to do in the meantime. And then eventually, if we get a rally between now and January, well above 100, 120, 130, anytime between now and the new year, we'll have more gains on top of that premium we just made from ASTS. So that is what they do. They go ahead and use the premium to go ahead and pay for other moves they want to make in the market. So any other questions, go ahead and reach out. Join our community for free. I appreciate you guys. I will see you guys in the next one. Thanks.